Great. Fantastic. I'll kick off. So welcome to the Park Launch session we're having today. Just to give everyone a bit of background for those who don't know us, Jonathan will introduce himself in a second, but my name is Aves Naqvi. I'm a venture capital investor in EM, and I focus specifically on the MENA region, including Pakistan. Have invested in the region for about 12 or 13 years, initially in private equity on the technology investing side, and most recently in early stage. That's half of what we do, and the other half is advisory to growth companies in the region, including in the areas of IPO preparedness and digital transformation. So that's a little bit of my background. So familiar, obviously, with the terrain and Jonathan's mandate, and would love to understand more about his background, about Antler and some of the strategies that Antler have executed globally and intend to execute in the region to scale presence. I'm particularly interested in people's personal backgrounds insofar as, what are their motivations, what are their personal histories that lend themselves to venture capital investing, and we'll get a little bit more into, understanding not just Antler, but getting to know Jonathan. So I'll pause there, and Jonathan, let me pass over to you. It's great to have you on, and I know you'd taken over at Antler in the region a while back, and we know Christopher, etc. But just give us a little bit of a picture on yourself. We'll get to Antler in a second, but tell us a little bit about your background, I guess, in Germany, and then some of your history, obviously, with Jumia and with Daraz and so forth, because that's particularly pertinent to our Park Launch community.
Yeah, no, thanks for having me. Happy to give a bit of an overview. So, yeah, studied business in Germany, and had always that link to the internet. Built websites very early on, and then after my PhD, kind of moved into e-commerce, but more on a corporate level, and realized relatively quickly that the corporate world is maybe not my world. And then met Rocket Internet, Oliver Samba, and joined Jumia in Africa. I was one of the managing directors there, specialized on marketing. Jumia is pretty much the Daraz in Africa at that time, also 12, 14 countries. Jumia, Nigeria was the biggest country at that time, with like around 80% of the business. Was leading the marketing sales department for 2 years. And Jumia later IPO'd at the New York Stock Exchange. So it's the biggest e-commerce platform in Africa. And then after kind of the Nigeria experience, I moved on to become the co-CEO of Daraz. Spent there 4 years. So we had the 5 countries: Pakistan, Bangladesh, Myanmar, Sri Lanka, Nepal. And yeah, bigger e-commerce company. And as everyone know, we IPO'd that to, not IPO'd, we sold that to Alibaba. So worked a bit with Alibaba, spent some time in China. And again, felt myself in that situation of being in a corporate, and decided then to start a complete new business from scratch in the Middle East. Did that with a company called Smileneo, a health tech company, rolled that out into Saudi and UAE, Qatar, and Bahrain, and then sold that business 2 years ago to an Indian competitor. And I met in that acquisition process, I met Antler, and kind of learn more about Antler, and I will obviously talk a bit about it, but realize relatively quickly it's not the typical VC. And maybe that's the only VC that me as a person that is very entrepreneurial can actually join. And yeah, became the partner, doing this with Romain, that I know actually for over 10 years. He spent 7 years at McKinsey, and we know each other, for quite some time. We're doing this now for a year. And yeah, why I joined, maybe a bit more why Antler and why I'm kind of doing this, is that Antler, in the core, obviously, thinks that a team in a startup is the most important thing. And the way we kind of go about it is that we say we're not just waiting for the team to invest, we're actually helping teams to come together. And I think that's something very special. So Antler's over 5 years old, started in Singapore, but we're now in 26 regions worldwide, where we have kind of the Antler model. And Omar and me, we're partners for the Antler MENAP fund. And I think here you already can hear my passion for Pakistan, because we added the P to the MENA region, because I believe that is something that is extremely exciting. Established then a year ago the fund here in the region that is only focusing on the region. We just finished our second cohort in Dubai. We had the first one in Riyadh, the second in Dubai. And what we're doing, in short, maybe as an overview for people that don't know so much about Antler, we're having a 3-month scouting phase where we try to get as many applications as possible from co-founders or founders that want to start a company, but they don't have a co-founder. So individuals instead of companies. So our deal flow is not companies, it's not pitch decks, it's actually individuals. So we have a quite tedious process in interviewing them, and then we put them into a program of around 80 people. So we had 5,000 applications for the last cohort, we're selecting 80. And then these 80 people, exceptional tech backgrounds, domain expertise or business. So 40% tech, 30% business, 30% domain expertise. And they kind of start mingling. They form teams in this program, teams of 2 or teams of 3. So we do master classes. We give them a lot of tools to kind of meet each other, to work with each other, challenges, etc., etc. And then at some point, these teams track out. So they decide, this is kind of my co-founder partner. And then we start coaching them. So Omar, me, venture partners that we have in the fund, we're coaching these teams on a weekly basis. They present to us. And then after 10-week program, from master classes, et cetera, over coaching, they kind of pitch, and then we make investments in around, I would say, 8 to 10 companies, which is around 20 people. So from 5,000 applicants, we go to 80 in the program, and then we invest in around 20, 25 people. That's kind of the deal flow. Fixed $180,000 for 11% is our investment terms, for everyone the same. And then we continue, investing and coaching them actually afterwards. So we're very close. We stay very close to our companies. We do follow-on investments. Also, by the way, Antler Global Fund will then invest in Series A, Series B. So Antler is always kind of on your side if you start with us. And that's what we do. There's a $60 million fund for the region. Very excited to talk a bit more about it and how it works and what our outcome is so far.
Fantastic. So just Jonathan, obviously you've got like a few of us, African experience and Pakistan Asian experience, cross geographic, emerging markets, what have you. Give us a little bit of a picture. I mean, I spent a bunch of time in Nigeria, primarily actually now in the tech space with an investment we have called Gokada, which is a very, very mini version of what Jumia have done, but quite successful in Nigeria. And then preceding that, an investment called Fan Milk in the FMCG consumer space. And, was always impressed by the potential in the Nigerian market. And then obviously, for various reasons, family and wider, including professionally, I was able to work in Pakistan and spend a bunch of time there. Contrast for us, the Nigerian market to the Pakistan market, because in some ways they're similar, but in some ways they're quite different. So give us a perspective on, because I'll tell you why, Jonathan. Nigeria has historically been very attractive for investors. If you look at Partech, if you look at the DFIs, there's always been, over the last decade, a substantial amount of interest in investing in Africa. And the interest of VCs in investing in Pakistan has been relatively much later and relatively much smaller, and it's only really happened in the last 3 to 5 years. Whereas if you go back even 10, 12 years, the PE funds were piling into Nigeria. Jumia was starting to get Goldman Sachs money, all that kind of stuff. So, tell us why that's different, and tell us why, you see Pakistan and Nigeria in different ways and in some similar ways.
So obviously I would say there's more similarities. I would say from my experience, I mean, I left Nigeria 2015, so it's also now 9 years ago. But obviously what I saw in both markets, obviously you have a population of around 200 million people each, right? And there is, and obviously Nigeria is the biggest economy in Africa, Pakistan very strong in South Asia. So obviously there's a lot of appetite from investment and obviously also from the startup scene, where like, okay, this is a potential. These countries, they need, for example, e-commerce, right? The space that we were in. But if you think about at Jumia, but also at Daraz. Now both of them are kind of 10, like Daraz a bit less, but Jumia over 10 years now in these countries, Daraz almost 10 years, and obviously still not profitable. And one of the reasons that we tried, I think, at the beginning, and maybe a lot of entrepreneurs tries to adopt a lot of westernized models and bring them into the countries. And I think you see relatively quickly that doesn't work. I mean, in Daraz and also Jumia, we built our own logistics company at the end of the day, because otherwise it wouldn't have worked out. And a lot of things just don't work. The basket is way smaller. We're talking $15, $16, and compared to, I don't know, $50 maybe in another region. So the whole logistics and the whole economics at the end of the day are extremely complicated and of course a huge challenge. So I think what I see in these models, for example, if I take e-commerce, that there needs to be a lot of adoption before it actually really works. And lucky enough, IPO through Jumia and Daraz has Alibaba, where you have actually continuous amount of money that flows in, because these the market here and the investor here believes that long term there needs to be some sort of e-commerce. So I think very exciting markets, extreme young population, mobile. I mean, we can go through all these things. They're very similar, right? But still infrastructure not there. And when we think about education on technology, for example, we had, I don't know, 40,000 sellers on Daraz, for example. You still need to educate them a lot on how to place a product, how do you mark out of stock, how do you deliver on time. Like there's a lot of these challenges that I saw very, very similar between these markets. Political instability is another factor, especially from investment perspective. And yeah, so I would say way more similarities, to be honest. And then here or there, obviously some local differences, but I would not highlight them as that's completely different from my experience that I saw.
Yeah, super interesting. I mean, I'm sure you saw commonalities, particularly Lagos and the big Pakistani cities. You'll get that relative depth of middle class consumers, and I guess one of the advantages in Nigeria that was a big one was English language as a means, right? Because in Pakistan it's still a combination of English and Punjabi, Urdu, etc. Tell us a little bit about localization of marketing and how that's different.
Yeah, good question. So we moved. So I mean, when you look at Nigeria, you have like 3 different tribes.
Yeah.
Then you have, but you have mainly English, obviously, as the dominating language. We used some local. So we have 3 major local languages. For us, it was more the south, so that we had, and we used some phrases, but I think marketing was mainly English. In Daraz, we changed that a bit. So obviously the website at the end still, and app obviously is the majority of the business anyway, was all in English, but the marketing went very, very quickly into Urdu, etc. So we actually used way more the local language on the marketing side of things compared to the technical side of things. So the Urdu website, for example, was never as important. It was then okay on writing, but when it comes to kind of the messaging and the local touch, advertisement, especially on TV, etc., that became very localized, and definitely way more localized in Pakistan than it was in Nigeria. I see, by the way, there's some questions. I don't know if you see them as well. I see some questions here on the chat.
Yeah,
on
we'll
the right
get to
side.
those. Yeah, we'll tackle
Okay,
those
great.
later. They tend to interrupt the flow of thought, but we will absolutely get
Very
to every
good.
single one. But in terms of so obviously fantastic experiences across Jumia and Daraz. Just one more question before we get to other people, which is, obviously you've been a founder and you've been an investor, and you've obviously got a strategic background also, and something of an academic background. Tell us a little bit about what, if you become an investor and you've been an operator, what are the adjustments and what are the challenges and what are the difficulties? Because I won't answer the question for you, but going from a driving seat position where you define the dynamics around the boardroom and around the organization, to my big issue is you're kind of giving advice, but you can't tell people what to do. So how do you find that adjustment?
Funny enough, actually, there is so far not so much adjustment because the first year of Antler was pretty much startup. It felt a bit like it. So for us
Yeah.
as Antler in the region, obviously there is the global brand, there is the global platform, there's the global knowledge, which helps a lot. But at the end of the day, we needed to build a team, we needed to build our process here, we need to establish our brand, etc., etc. So there was a lot of we need to literally we raise the fund, we have income, etc., etc. So management fees. So all these things felt a bit like a startup at some point, or to some degree at least. So from that perspective, it was quite similar. The experience and was super exciting, and we're still building and we're still adjusting. And when I look at the first cohort versus the second cohort now in Dubai, we made adjustments. So there was a lot of startup, I would say, in my work, which is quite exciting, including fundraising, different fundraising, but also fundraising. So that was very, very similar, funny enough. When it comes to the investment side of things, what I enjoy very much that instead of maybe breaking my head around one idea and one business and one startup that I'm running myself, I can include myself in various discussions now and try to give as much advice as possible. I mean, mainly on the things that went wrong or that where I made maybe big mistakes, or also where I make the right decisions that help me afterwards in succeeding. So that's why being in all these discussions, helping the founders, I enjoy that quite a lot. And I must say, so far, I didn't have the feeling that I say, "Oh, I would love to make that decision now." I think I'm very excited to be part. Obviously, I see a lot of founders interview in the process first, and then obviously in our program coaching them. It's incredible to see. I would say number one, the talent that we get from all over the world coming to the region, building for the region. Obviously, we have a lot of Pakistani founders in the program in each cohort, building for the world or for the region. We have one company, Paradigm, an e-vehicle company that we invested in December last year. So obviously, there is a lot of excitement working with these founders and see all these amazing ideas and how they execute them. So I would say, funny enough, even though I'm on the investment side and I need to make the decision at the end with my investment committee members, I still feel very close to what I have done before, even though I need to make sometimes now the decision if I believe it will fly or not, but still very close to startup, funny enough.
Fantastic. Great answer. So just a quick one. We'll obviously move on to questions, but here's an interesting one, which is obviously a fundamental kind of aspect of venture capital investing, which is, founder characteristics and founder DNA. Okay, so from your experience as an operator and from your experience as a leader of C-level and from your now, differentiated experience as a partner in a fund that is effectively an investor in founders. I mean, that's kind of what you do. You write the first check, you get the DNA right of a founder and you get the characteristics as close as possible to a benchmark that we know is pretty scientific, plus or minus a few nuances. Tell us a little bit around, what does it take to be a great founder? And if you take, startup to Series A and B, and then beyond, if you break it down into those two phases, but tell us what you think are the core characteristics and how they translate as the company scales.
Yeah, very good question. And actually, there's as you mentioned, I think it's quite important. There's actually different phases which are quite interesting. So where we invest and what we look at in the program during the 10 weeks is, or actually before, obviously, to select people, we're looking at, there's only so much we can interview, right? And it's not like interviewing for a role. So we're trying to find, is there what is, first of all, the motivation of them to start? Why do they want to build a business? I always ask them, why do you want to do this to yourself? Why do you want to be a founder? That's a horrible process and will take a lot of your time and it's not always pleasure. Like, why do you want to do this? I really want to kind of test how much they are ready to suffer, kind of. I think that's one thing. And obviously their skill set, their experience, what drove them. We have 85% people that we're selecting for program that actually worked in startups. Over half of them actually already built their startup. So there's a lot of experience where you don't need to explain anymore what the basics are. And then when we're in the program, obviously we look how the team dynamics is. We're observing our founders quite closely. their dynamics as an individual, their dynamic as a team. How do they work with each other? Why did they actually come together? We have these 50 founder questions that where we ask them sometimes very simple questions that they don't ask themselves if we don't ask them. So about exit and equity and work hours and a lot of things where we realize they make a lot of sense. So when it comes to that founder DNA, I always tend to simplify things in the very beginning and say, we need to find extremely smart people, in my view, that are ready to solve every problem that comes their way, because this is what happens on the daily basis. And in the program, we look how fast they execute. And we see this sometimes that we get smart people in. I don't know, they explain us very well. They work on great ideas and they're very good in explaining and understanding and coming up with solutions. But when it comes to progress and what we see in the 10 weeks, how fast they move, the validation, dealing with issues already during the validation, pivoting. And here we see sometimes already people like it slows down and the execution is quite slow and they don't even know how to kind of navigate through this. And we can see quite quickly, like, okay, they're smart. They might have an answer to questions, but the speed of them executing and then actually executing and doing things is not that fast. So very simple, super smart, answering all the or navigating through all the challenges, but then also being very fast in execution and moving very, very fast. I think this is kind of the base. And obviously there's way more behind that. When we invest, it's very much a team decision. So we really need to make sure that the team is great. We love the team dynamics and we believe they can solve that. If the idea is an 85, 95% idea, we know they will figure it out and they can pivot. If it's a 100% idea, we really believe in the concept, but the team is an 85%, that is a problem for us. So for us, it would always be team first. And then you mentioned, second part of your question was kind of the later stage.
Yeah.
And here it's quite interesting how founders, in my view, and I think one of the big characteristics is also like, how big is your self-awareness? And we see a lot of founders that are very good in the 0 to 1, but then when it comes to 1 to 10, it's a different kind of founder type. So especially when we see Series A to B, this is where sometimes the founders from the beginning need, either way, they have two founders and one is more the 0 to 1 and the other one is the 1 to 100, 1 to 10, or you kind of get external people. So what kind of senior hires do you have in a company? So there's quite interesting in founder characteristics to the journey. I don't believe that you have it very rarely that you have like a 0 to 100 guy that is perfect on every stage. And I think what's very important is the awareness around that, the awareness of like, what are you good at and where you really need that other co-founder or where you need a senior hire. And this awareness is extremely important. And we see this in some of the founders early on that they navigate quite smoothly through that kind of challenge. So I would say throughout the founding experience, that's something that is quite exciting. We obviously, when we invest, we look at for the 0 to 1. This is the phase that is the most important for us. And then we would make the investment if that's right.
Yeah, interesting. I mean, if you take the kind of 0 to 100 founders that exist, I probably work with a couple of them. I might put Mudassir Karim in the 0 to 100 category, and I might put Mo Baluth at Kitopi in the 0 to 100, simply because one's experience of working directly with them has been that the maturity and execution capabilities and strategic framing and the balance of kind of thinking and executing is early on very clear. The team building capability starts evolving and growing. The ability to see one's own weaknesses starts evolving rapidly. The single biggest characteristic that you start getting focused on later is the stakeholder engagement, which generally never gets referenced, but there are founders who are great with board members and they're great with investors and they're great inclusive leaders of different types of people. And there are some people who they don't want to raise money. They don't want to sit around a boardroom table. They don't want to get told what to do by somebody experienced, perhaps in another industry. And they sometimes even don't want to sit around the table with VC guys. And we'll get to the characteristics of VC people in the region, but there are shortcomings on both sides. where there are people I wouldn't have around the table. So, no disrespect intended, but there are some people who need to learn that working with founders is a skill that doesn't just come with applying capital. You've got to have the capital and the ability to have a conversation. So what's interesting is, on that latter part, and obviously you're entirely focused on 0 to 1, which is completely sensible because you don't want to go beyond that and complicate the issue. But, where do you see, the big challenge becomes when you invest in a founder, most investors go, we can't rock the founder's confidence by talking replacement, talking succession too early. How do you compensate for weaknesses in a founder?
I mean, it is a bit at a later stage. So we, like my experience in that part is from an investor side of things is very limited because we just started investing and we didn't have a situation in our portfolio companies yet to be there. But I think what we can do in the early stage to prevent issues is that we have a great team that starts already as a team. And I think one of the things, obviously, that we look in the team dynamics is that when we have 2 or 3 co-founders, that they're very good also in talking with each other, obviously, and giving each other feedback. And I think you see this then at a later stage when these challenges come that you just mentioned, that if you have a good founder base of 2, 3 founders that, and it's not only one, that you actually have at least one in the team or maybe also in the conversation where they give each other that open feedback, that they can identify when there is a situation where there need to be adjustments. Sometimes you have also 4 or 5 founders where 2 are dropping out at some point. And I had stories in the past where that can happen in a very smooth way. If there's a good base, and I think this is what we're looking for. We're looking for this good base in teams and really a strong foundation. And I believe if we have that strong foundation and we invest in a strong team, then whatever challenge comes the way, and if this is even a challenge of I'm not the 1 to 10 guy or I'm not the 10 to 100 guy, that people are then self-aware enough to make the right decision. That doesn't need to be always leaving the company. There can be various ways of getting out there. But I think the base for everything is that you have a solid team that is not only driven by ego, but is driven by a lot of things. And I think self-awareness is definitely one of the big points that we also look at when we invest in them. And we name that sometimes like coachability. So if we're in the program and there's a founder team and they come in, there's something, and we believe there needs to be a bit of a shift, and we give them feedback, and then we look how quickly can they shift, or they say we ignore every feedback, and there's various coaches obviously, but we see sometimes people are very good in then really also listening to the feedback, not always doing what the coaches say, but listening to the feedback and taking that into consideration, which is this coachability. And I believe if you have that, that also will help you at a later stage to listen, maybe if there's something that needs to be adjusted.
Yeah, great. I mean, in terms of, I'll just ask one more question on this subject, which is, in terms of the characteristics that you think are non-negotiable, there are things that absolutely are coachable, and then there are other things which are just complete red flags. What do you think are the things that are just, you wouldn't go near a founder because of these characteristics?
Yeah. It's obviously, if there's something that kind of hurt our trust, or if there's something where we see that where someone didn't play by the rules, and I'm keeping it very high level now, but something where we clearly see there is an element that would create a distrust, or an element of doing things not in the right way. Also, from a behavior perspective, we had that. It doesn't happen often, but there is also obviously dynamics between founders within the program. We can observe these things, and if there's things where we feel like that's a bit odd, and it makes and there's a human behavior that we would not support. We have a very strong ESG program as well in Antler. If there's things that we identify as not really aligned with our vision, but also obviously with our values, that is definitely a no-go, right? So if someone goes out of bound there, that's definitely something we would not invest in. And that happens sometimes, and it's then very clear for us. We need to, at the end of the day, as investors, trust our founder 100%, not only that he has the right values, but that he also executes them in the right way. So there are definitely things, but it's not from a characteristic point of view. It's more like if there is a clear breach in being a bad character, etc. That's definitely then the way to go.
Very good. So moving on to the questions, and then we'll come back into a couple of ones one may have. What's different about the program? Because obviously we've got, Techstars and Seed Stars and Flat Six and many incubator accelerators orbit in the region, quite active. What's different about your approach?
Yeah, no, we have a lot of great accelerators in the region: Sanabel 500, Flat Six Lab, Techstars. You mentioned them, and they're all extremely different because what they all do is they're taking teams in. So literally, the companies that we invested in, they are at a stage when you think about after, like they meet co-founders in our program, and that's the major difference. We don't have deal flow. There is no deal flow in Antler for us as a residency program. We have a flow of individuals that comes in and they want to find the best co-founder, and they find that co-founder in the program. If you think about it, if you find your best co-founder and you're in a room of 79 people or 80 people and you find 79 other people that were selected by Antler out of 5,000, that obviously is something that you personally will never be able to access if you find your co-founder with, like, I don't know, university friends or in your private networks, etc. You never have the access to 79 exceptional people. This is the main value that Antler brings, is putting you in a room with 80 individuals that are exceptional. And that's very different to all the other accelerators. We're also not an accelerator because there's nothing to accelerate. When you join us, there's nothing to accelerate. You first need to find a co-founder, then you need to come up with an idea. Some have an idea, some don't. And then we start coaching and then investing. So that means the teams that we're investing in, they're still finalizing their MVP, which then happens 2-3 months after we invested. They could literally join these accelerators. When you look at the timeline, 2, 3 to 6 months after we invested, they could theoretically join a Sanabel 500 or Flat Six Lab. So that's the main difference, is that we are not accelerating. We're not having companies or deal flow. We're working with individuals. We match them, they match themselves. So it's really that co-founder matching that is at the core of what we're doing. And yeah, that's why there is a major difference. And when you look at the whole flow of like pre-seed, seeds, Series A, etc., we're literally day zero, and there is no one in that space in the region.
Yeah. So just a couple of other questions I'm seeing. One is, what's the geographic qualification criteria in terms of the fact that somebody's asking if I'm in the US, can I qualify for the regional program, number one? And second question I'll just add on to that is, 3 SaaS founders, do you have to be just the sole founder or can you be a team?
Yeah. So from a location perspective, Antler exists in 26 locations worldwide, right? So wherever you are in the world, you will find an Antler, at least if this is a hub for startups. To be able to join us in the MENA region, you need to have some sort of idea why you want to be with us, right? And that's normally 2 reasons. Number one is you want to build a business in the MENA region. It means your market is in the MENA region. Or number 2, you want to build a business for the world out of the region. And the reason why you're in the region is something that has to do with governance or regulation, etc. I mean, we see that in Web3, for example, where you can build companies here in a different way than elsewhere in the world. So to be with us in the MENA region, you need to have some sort of idea why you want to be here. Normally, we don't have founders that say, I'm in the US, I want to build for the US, and I don't want to leave the US. Then they should join Antler in the US, obviously. So that's why to join Antler MENA, you have some sort of link in the region. But what we see is we have a lot of people. So last cohort, we had people from 36 nations. So we have people that either way live already in the region, and we have a lot of people that actually move to the region and then join us and then build their business here. We see this now quite a lot happening.
Great.
Second question was on the members. So if you're a team that's normally already too late, we make exceptions where we onboard into our program teams. Maybe that's around 10 people out of 80. They have already found a co-founder, but they have not raised any money and they want to be in the region and they're very early on. Then we accept them, but that's the exception. Normally, it's an individual that wants to find a co-founder.
Yeah. There's a question which I'll slightly elaborate on, which is, fresh graduates versus experience. Here's my version of that question, which is, what do you see as the prerequisites for entering the program from an industry experience perspective? And can you be somebody? I mean, obviously, you don't need to be an industry practitioner in an industry to disrupt that industry. In fact, most likely you're not in the industry. But what are you looking for in terms of working experience?
Yeah. So what we see is that what we try to optimize for is that we have 40% tech people, 30% domain expertise, and 30% business. Why is that? Because from a combination of founders, we know that that's kind of the perfect mix to actually get these teams. If we would have 100% only tech people, it wouldn't work out, and business obviously the same way. So this is what we try to optimize for. And what we see, but that's not like what we optimize for, it's what the outcome is, that the average work experience in our programs is 13 years. So our tech people are not the guys that are like developers for 2 or 3 years. It's actually CTOs that manage teams of 50 or 100 people because they want to be co-founders of a company. They don't want to be just a tech guy. And that's why we see a lot of work experience, as I said, average 13, 14 years. Same with the domain expertise, someone that worked in banking, oil and gas, insurance, whatever. And we see then a lot of work experience. And these guys, after that time, they identified always very, very clearly a problem where they want to build a solution. Someone that works for 2 years in a domain doesn't have that deep down knowledge yet to identify a clear startup in that region. And that's why our average work experience is 13 years. But again, it's not our goal. This is literally an output factor out of our scouting process. What we see from out of university, there's a lot of skills missing and there's a lot of expertise missing where we believe it would be very hard to kind of build a company. Are there founders like Zuckerberg and co that obviously drop out of university and build a startup? These are, I think, exceptions. They exist, but I'm not sure if we would identify them for our program, to be very clear. And when it comes to sector, we're sector agnostic. We don't have a specific focus. Everyone that wants to build an amazing business is welcome to our program. And at the end of the day, the team is the most important thing for us.
Great. There's a question which, again, I'll rephrase slightly, which is around, industry focus, emerging markets and region, and industry focus Europe. So here's a hypothesis, and here's a bit of stereotypical thinking, which is in Europe, you'll get more deeper engineering talent, you'll get more generative AI and other forms of more frontier-oriented investing because people have industry backgrounds and domain knowledge, which is greater than that in the region. Number one, is that true? But more importantly, if you're investing in Europe in what you do and you invested in the region, do you have to compensate, or do you find the quality of people in some of these areas is as good here as it would be, in Germany, okay, in a program that Project A were doing, or in the US or what have you?
Yeah, no, we would never compromise on quality. And what we see here is absolutely the quality that we see everywhere in the world. We have also way more applications. So for example, our last cohort, the 5,000 applicants, was the highest application ever in an Antler cohort worldwide. So we see a lot of people coming to the region. Makes our process very complicated. So for the last program, I interviewed myself 175 founders, and my partner interviewed the same amount. So you can imagine there's 1,000 interviews with our team that we have. It's a quite tedious process to select these amazing people. But at the end of the day, we would never jeopardize on quality when we make the investment. Then rather we make less investments. That's why also there's no fixed number of investments. We will invest in the teams that are great. And obviously what we see over time now is that the region has shifted quite a lot. And now we see more and more also talents that maybe would have not come 5 years ago, especially because the region is changing dramatically. Saudi and also the UAE, Bahrain and Qatar are doing a lot to kind of change and to attract founders and startup. And I think that's something that we see that attracts amazing talents from all over the world.
Fantastic. And in terms of, if a founder were to come into the program and apply, what level of maturity of their idea do you expect to have in front of you?
Yeah, very good question. We get that a lot, and we actually have zero requirement. We have people that have very clear views on their idea, and then we have people that say, "I'm a tech guy. I was a CTO. I managed 150 people, and I'm done. I want to start a business. I know that, but I actually don't know 100% what I want to do. So we accept pretty much everything. We have everything on that spectrum. And then within the program, we see also when teams are forming, sometimes we have people that have both very strong ideas, or one has an idea, the other does. Like, so we see all kind of dynamics happening, how ideas are changing, evolving over time. Idea is not the most important thing. It's good to have one, but we don't mind, and people can literally join with maybe in an area they want to join a startup. So we're very open to that, because we see that that will form automatically based on the team that is then forming. And I think people are very much surprised by the team needs to form first, and then they actually talk more about the idea at the end of the day.
Yeah. And in terms of, before we move on to the next question, in terms of valuation, you're talking about, I guess, $5.5 to $6 million valuation of the business, I think, at the valuation which you come
1.6 million.
in. I'm sorry?
No, 1.6. So we do 1.6. So we do $180,000 for 11% of the business.
Okay.
Yeah.
Okay.
I'm just putting it on the chat. So it's 100, and it's fixed for everyone. There's no difference, because people know each other for literally 10 weeks. So it's very early on, and there's no difference in valuation based on better idea or anything that doesn't exist really. So that's why it's fixed. Yeah.
Got it. Understood. Sorry, I'd misunderstood the number. So in terms of, Pakistan, are you seeing the emergence of, great investable opportunities in Pakistan versus, let me widen the question a bit. If you take UAE and you take Saudi and you take the other GCC states and you take Pakistan, roughly proportionately, where's stuff coming from?
So at the end of the day, as I said, the founders in the last program were from 36 countries. Pakistan was I think in the Riyadh core, in the first one, Pakistan was the biggest nationality. Saudi was the second biggest nationality.
Interesting.
I think in this program, I think the Pakistanis were the third biggest nationality. So we're always very quite mixed. And at the end of the day, people are building in the region for the region. As I said, first cohort, we made 13 investments. One of them was in Pakistan. So they're building in Pakistan. This program, we're literally in IC today and tomorrow and the day after, so I'm not sure what the outcome will be, and if we have a Pakistan startup. So that's kind of, still to be seen. And I see that the question on Orbit is a much same amount, higher percentage. But again, I mentioned already before, Orbit has nothing to do with what we do, right? Orbit is a VC early stage. They literally invested in Antler companies before. So you always need to look at the funnel. And I think that's also what people need to see. We're not a classical VC that just invest. We're literally spending 3 months on scouting, bringing 5,000 to 80 people. And then we have a 10-week pretty intense program to bring people together. So the value of finding your best co-founder out of 5,000 people that we kind of selected is obviously something very unique. But then the companies, when they come out, we see in Orbit, we see Humber Perks, we see Y Combinator sometimes, like there is Sequoia. So all these guys, and as I said, theoretically also Sanabo 500, Platzi Invest, all these programs and early stage investors are actually still, even though they're early, after Antler when it comes to residency, because it's day zero, it's team only investment, and no one does that in that way. And then after people raising a seed round, normally we see 6 to 12 months after the Antler investment, we see a seed round raised around $800 to $1 million. That's normally what we see in Antler companies.
Yeah.
And by the way, 50% of the companies that we invested in, they already die after our first investment. So that's obviously early stage investment.
Absolutely. And in terms of, just for people's clarity, I mean, obviously there's an Antler global fund. And so you obviously have the ability to invest and then effectively follow on at subsequent stages. Which other global investors tend to be the primary ones who look at Antler opportunities? If you were to talk about, 3 to 5 investors who look at your deal flow, who are the biggest ones?
Yeah. So you mentioned the follow-on. So we, as an Antler fund, we do the first check, and then if the startup raises at least 75% of their seed and Series A, we would do pro rata rights, and we will do follow-on investment even without checking the startup. So Antler is really with you in every round, and we will not lead the round, obviously, otherwise we would lead our own round. That makes no sense. And from an investor perspective, here in the region is relatively new, right? Our startups are not at that stage yet, so there is no real data I have for the region here. And if I think globally, as I mentioned, from Sequoia to Y Combinator, there's pretty much all kind of orbit. All of these investors are literally potential investors. We also see startups raising not directly from VC, but maybe from angel networks or angel investors, even after Antler. Again, it's extremely early when we invest. Teams are just knowing each other for 10 weeks. And that's why we see even angel investor tickets. And then the typical very early, like every big investor in the world that is an early stage investor could have invested or could invest in an Antler company. That's very standard.
Yeah. Let's switch the subject a bit, Jonathan, because, everything is, it's always full open kimono when it comes to founder characteristics. And very few people talk about investor characteristics, which is my pet subject, which is, how do investors behave, and how do we build the capability of investors to be more effective investors? Because the reality is, if you look at any program in the world, it's all geared to building founder capability. No one really invests in an industry basis, and ensuring that investors behave the way they should. And I've seen, to be honest with you, as many failures of investors messing the business up as founders and founding teams messing the business up. Now, I don't want to get into the politics of that because that's one of those elephant in the room conversations you can't have in an open forum. But the reality is I see investors who I wouldn't take money from because they don't have either the operating chops, the behavioral EQ, or frankly, even the technical knowledge to be able to invest in that particular industry or category. So, tell me a little bit about, without throwing any stones, what can investors do to become more effective with founders?
To effective with founders. Every investor has their different way of assessing founders, assessing teams. Obviously, it has to do also a lot with stages that you're in, right? And I can only talk about our thesis that for us, it's extremely important to spend time with the teams, to spend time with founders. And we, as I mentioned before, like sometimes we see in the interviews clear indications, but in that 10-week program, our opinion shifts quite a lot. And I think this is really very good evidence that as soon as we spend some time with people and we try to obviously challenge them, that things can shift. Also behavior, sometimes when things get maybe a bit more rough or a bit more critical, you see that behavior of founders is very, very different. And I think that's extremely important to identify this. And I think that's also what investors try as much as they can. But there's also the question, how many times can you meet a founder before you make investment? And what we see a lot here in the region is that VCs always ask us, even though we invest maybe in Series A or we invest in seed, but we want to see at least a 12-month traction, they still want to meet our founders immediately. And the reason for that is obviously that they say we want to spend some time with them, we want to observe them over time. And I think that's something that I enjoy very much, seeing that investors are really trying to see their progress and trying to meet the founders. At the end of the day, every challenge can be faced and every challenge can be solved, but you need to have the right team dynamics, the right founder dynamics. So I think that is very, very, very important for us, and I hope for every founder is that for every investor that we really look at teams. Most of the investors do that anyway, right? So, but obviously the later the startup, the more we look at financial models and we look at these kind of outcomes. And I think maybe sometimes we're getting very excited about numbers and we're forgetting more and more the founders behind and how they reach the numbers. And I think that's something that definitely is important. And we have seen many companies where we had a bad surprise at the end, and maybe investors maybe looked a lot at the numbers, but not so much behind that. And I think that's obviously what we try to solve as much as possible, that we base it on teams and people.
And how much of your time, as an Antler partner and as a team in these cohorts would be spent, on the psychological dimensions of being a founder? So let me paint you a picture. There's having a great idea, and then you're good enough to get through the program, and then you get the money, and then you realize, oh, okay, I now have to put on a psychologically completely different, set of skills, adopt them, build team, psychological pressure, revenue pressure, domestic pressure, finding customers, dealing with customers, building teams. That's a psychologically wearing experience, which many people are not ready for. They don't realize that the biggest toll on a founder is the psychological challenges of having to build something with somebody else's money and having to pull it all together, and the inevitable toll it takes on your life. How much of that are you looking for in terms of how you can help solve those psychological dimensions as opposed to just the operational ones?
Yeah. Obviously, we try as much as we can during our residency to test these things. There is different kind of, obviously, so the program is, how can I say, it's not like a school. You're not like having like master classes and that's it, right? It's a very active program. It's something where obviously we have master classes, but we have a lot of challenges where founders need to go through different kind of challenges. So we try to poke a little bit holes in different kind of concepts. We try to challenge them, and obviously also the team dynamic when you're in a group of 80 very exceptional people. A lot of founders, as I said, over 50% founded startups before. Some of them have exited companies, and very successfully, by the way, and still join our program because they want to find that best co-founder. And I think that's very inspiring to see. So we try on that base as much as we can to test them. And there's a lot of validation that teams need to do. They need to get a lot out there, and there's a lot of pressure also within this phase. We're very transparent in our feedback. It's posted always in our Slack group, so teams are seeing how they're doing. So we give very direct feedback to the teams. So they get already a lot of pressure. And we have cases where founders say, yeah, Antler, I go on this program, and then maybe I get some investment, and then I see if I'm a founder. These people actually realize after 2 weeks, and they come to us, and we have, in a cohort of 80, we have maybe 2, 3, 4 people. And not all of them say it, but maybe there's some that say it and some that not. But they come to us and say, I realized this is not for me. I realized I'm not the founder. I'm not ready today, or I will never be that founder. So we really try to challenge these people in the program as much as possible to prevent that these reactions happen after the investment. And some realize that quite early on that that's not for them. And I think that shows that the program is doing the right things with them and showing them that it's not a corporate job at the end of the day.
Yeah. And in a fund like MENA Pakistan, where do you raise money from?
I don't understand that. For the whole
LPs.
Fund or only in Pakistan? LPs,
no. MENA Pakistan,
so
what kind of LPs do you look for?
So for LPs, we're raising in the region, or we raise in the region. So it's a $60 million fund, because I saw the question, how big. We still haven't closed the fund yet, the final close, but we raised so far from obviously sovereign wealth funds in the region that are very interested in the early stage space. So they're supporting obviously the ecosystems to build startups. You have that literally across the region. And then we have family offices, high net worth individuals that invest tickets in the fund as well. So whoever's interested can contact us as well, not only for applying as a founder, but so high net worth individuals, family office, and obviously sovereign wealth funds, all in the region, some of them outside, but I would say the majority of our fundraising happens inside the region.
Yeah. And what's your minimum ticket size for a fund investment?
Minimum ticket size is $1 million.
Okay, understood.
Yeah.
There's one question actually which I saw, which is around the closing down of Techstars Toronto and the challenges of. I mean, obviously you can't comment on that, but what are the challenges of keeping it rolling over time?
Yeah, I'm not really involved in Techstars, so I cannot comment on that. But obviously, different kind of programs, different kind of markets. I mean, there's always challenges, I assume. But yeah, we're focusing on what we do and what we have done. Also, Antler-wise globally works. We have also Antler Canada very successfully running. We have Antler USA, and we see a huge demand in all the regions for the program and the residency that we run. It's literally that co-founder matching that are people very interested, because they know how hard it is to find that perfect partner. I mean, we're talking about 6 to 10 years in building a business. It's almost like a short marriage. It's someone that you need to spend a lot of time with and need to have a high level of trust. or actually 100% trust. So it's not easy to find that combination of complementary skill sets and sharing the same values, sharing the same vision. This combination is not easy to find, and that's why people love the Antler residency, to have that chance to meet 80 other founders that want to start something on the next day.
Yeah, I mean, a while back, I was involved in mentoring on the Founders Factory program in the UK. And one of the things Founders Factory have done quite well is, build a bench of very, very strong corporate partnerships, which become quite powerful because then they become almost like an inbuilt customer opportunity for the startups. If I want to get to Emirates Airline, if I want to get to, XYZ in Saudi Arabia, Antler can help me get to some of these brand owners and business operators. So where do you see the role of corporates in terms of, I mean, we have a lot of corporate members in the community in Park Launch, senior executives in software companies, enterprise players, even in the consumer space. What can corporate players do to support programs like Antler?
Very good question. I mean, we have obviously different kind of conversation with corporates and with big companies in the ecosystem. There is a lot of requests on how to support, and obviously corporates always have that challenge, like how do we innovate? It depends a bit on the size, but the bigger you are, the less innovation maybe. So we see this, for example, with Aramco. They have Wahed as an accelerator, so they're building their own kind of programs to kind of accelerate and innovate for their businesses. So we are in conversations with different kind of corporates to help them maybe to see if there is founders that are not getting into the program, and they could be great as employees or as innovators within the company. Obviously, we have the chance also, if someone is interested in sponsoring events or like roundtables or sessions, or even the residency, because they want to be part of that innovation. That's always possible, and happy to get in contact with. I think that's how we see it mainly. And then the second part is actually that obviously our startups at some point, some of them have customers that are corporates. So this is always very exciting. That's why they want to stay close to us to see what is the innovation that comes out of Antler that could be a potential company that they use and be a client, or maybe at some point even acquire that company, right? So that's why we see for sure interest from different kind of ecosystem players that are not directly involved, but indirectly very interested of what we're doing.
Yeah, great. Couple of final questions as we wrap up. One is, ex-Daraz question, ex-Daraz employee, which is, how satisfied were you with what you achieved at Daraz, and, what were your learnings, I guess?
I just posted my email address because there's some requests. I'm happy to receive emails you can send me. I'm very happy. It was a very exciting time. Learned a lot, exciting region to be in. And obviously also the Alibaba acquisition was huge learning. Working with Alibaba was an amazing learning. So it helped me a lot on where I am today. What I also did afterwards with Smileneo, with the startup, and also even till today, it has a huge impact on my life, including the P on MENAP for the MENAP fund. So that's why, it was a great time to be at Daraz, spend time in Pakistan, especially. I saw quite a lot of the country, especially the north, obviously, which is extremely beautiful. It was very exciting, and it's still a very close experience to my heart.
Fantastic. It was great to hear. And just one final question, Jonathan, in terms of, parting observation on what would be your advice to founders in the wider region, what would be the single thing you'd love for people to take out of this session?
I think what is really important is to find a great co-founder. And if you have a great team, I think that's really the base for a lot of things that come after. And if there is a fear or not being sure, I think having a great team is really the most important thing. And obviously that's the space we're in. And if people want to apply to us, they're absolutely welcome to find their next co-founder in Daraz. The next program starts in October. We'll be in Riyadh, and this is always the location, but happy to come or to invite you guys to apply to our program. to find that co-founder. I think that's that's the most important thing. And when it comes to the region, I think there's no better region right now than to build here. Obviously, Pakistan still a lot of challenges, but I think it's an amazing country that has a huge potential, and also more stability will come back for sure in the next couple of years. So the MENA region is extremely exciting when we see how much capital is deployed into the region to build the ecosystem, to build startups. It's absolutely fascinating, and is a great place to start a business. So and obviously when we look at the world and maybe the crisis that we're more or less in right now with different kind of situations, I think that was always the time in the world when you can see there's a lot of amazing startups that were built. So I think it's a great time to build. It's a great time to build in the MENA region, and we hope to be part of that, to contribute as much as we can, and whoever is interested, joining us, supporting us, as well as an LP or as a sponsor, whatever, please get in contact. I put my email address. If you want more information, there's also the website in the chat. Happy to support and with whatever we can do, and get in contact with me if there's anything you're interested in.
Fantastic. And just one final thing. I mean, obviously extremely interested and always welcome if you want to be hosted in Pakistan by ParkLaunch, by the community, by the teams, by partners of ours. If you've got any trips planned to anywhere in Pakistan immediately?
Currently not. I'm looking forward to get an invite to come back. I think last time was 2019.
Okay. Well, treat that as an open invite as of now. So, you know, we'd reach out to you, because it would be great, actually, you know, whether it's in Islamabad or Lahore, to have you there, and you'll have a bunch of friends, but you'll make a whole bunch of new ones once you partner with our community.
Would be great to come back.
Fantastic. Really appreciate your time, John, and thank you.
Thank you very much, guys.
And for your knowledge, and would love to have you back on again at some point in the future.
Sure.
Great stuff. Thank you.
Thank you. Bye-bye.
Thank you. Bye.